Hello guys, welcome to Make It Big Online YouTube channel. And this video I'll be brief just to show you what you can do to do what we call tick trading. Okay, so in boom and crash there's what is called tick trading. Tick trading is these little ticks you see here, these ones. These are the ticks, and this long drawdown we call them spikes. So I'll be teaching you how you can follow the ticks successfully, and in the next video we'll be learning how we can be catching all these spikes. Okay, so stay tuned. If you are new to this channel, subscribe so that you don't miss important updates. Okay, so we are going to go straight to the video so that it will not be too long. So you are going to click on this F, which stands for function. So you click on it, you look for moving average, and you can put the properties you see here. Your period should be 100, period 100, shift 0, apply to method simple, apply to low, and choose your color. You can use the color that I use here so that everything will be okay, like you can follow easily. But you can choose your color. The levels, just leave it like that, don't put any level. When you are done with that, just click done right here, just click done. So we're going to click done now. Okay, that is this line, this blue line you are seeing right here, this blue line. Okay, we are going to add another. Click on it again and click on this shift, this function here. Then you are going to click on moving average again. Okay, moving average, which is this. So you click on the moving average. This time around we are going to use the period of 10. This time around we are going to use the same data, like the period is 100, everything, but this time around the apply to this part is not going to be low, so this one is going to be high. Apply to high, and we are going to change the color to color red. You can use any color you want and leave every other thing the same way you see it. Then click done. When you are done, you are going to see two lines, one blue and one red. If you are using different colors, you are going to see them, the two different colors like that. Now these two moving averages are going to help us to know the direction of the market. Like if the candles are below the moving average, then you can be sure that it's a sell market, a short market, which means market is going down. But if the candles are above the moving average, like in this case, you can see the market bought all through to this point before returning. So that's one thing you can do. That's the use of this moving average. You can see the same scenario happened here. So we use the moving average to know the direction of the market, either upward or downward move. So we still need other things. The next thing we need, you click on the function again and click on this F. Of course, you should know what to do by now. Click on it, and this time around you are going to look for parabolic SAR. This is it here. Look for it, parabolic SAR. Click on it and use the same properties you see here. Step 1.0, maximum 0.2. Then you are going to just choose your color. You can use the color black, any color you wish, but make sure this color is opposite the color of your screen. So if you are using a dark screen like the black background, this color should be white. If you are using a white background like me, you should use black or any other color that is visible. Leave the levels, do not put anything down, click done. So when you are done, you are going to be seeing these black dots. These dots, go back to 1 minute, these dots represent these ticks. So this tick trade is what the dot actually represents. The dot does not, this parabolic SAR, which is these dotted black dots you see, these black dots you see here, they are the parabolic SAR. We know what to do with them. And the last indicator we are going to use is Bollinger Band. So come again, click function, and this time around you are going to go under oscillators and look for Bollinger Band. Okay, here it is, Bollinger Band here. So you click on the Bollinger Band and you put your period to 10, the deviation to 0.100, shift of 0, apply to close and choose your style as according to your preference, the way you want it to look like. Okay, so we'll click done again. So now this is our Bollinger Band, this line, this one. Take note, this one is your moving averages, the two moving average, while this one is your Bollinger Band. Now that we have successfully set up all our indicators, the next thing we want to do is to know when to buy and when to sell. So basically, remember I told you just now that if you go to higher time frame like 1 minute, 1 hour, 15 minutes, this is 15 minutes and all that, you can use this to know the direction of the market using your moving average. So from here we can see that the candles have crossed at this point, the candles crossed below the moving average. This suggests to us that this is a downtrend, the market is going down. That's one thing you need to know. You go to higher time frame and you check, okay, these things, if they are still above, like in the case of this part where the candles were still above this point, then it's a buying market. But now they have crossed these two moving averages downward, so this is a selling market. That is the first thing you need to do. So having done that, the next thing you want to do is to go to 1 minute and check. So when you come to this 1 minute, you discover that the moving averages are above. You can see the moving averages, they are above, and all the candles including the spikes, they are below it. So this suggests to us that this also is a selling market. So the next and final way to enter this trade is for you to look for this Bollinger Band. This Bollinger Band, this is your line. You look for places to enter. So what you do is you wait when there is a spike. Remember I told you this is a tick trading strategy, not a spike catching strategy. We are going to make a video. I'm going to make a video and post it on this channel, so you can subscribe to get the video on how you can catch these long spikes. Okay, because when you catch just one of these spikes, you can really gain a lot. So basically what we'll be doing here is we'll be following the ticks. But how do you know when to follow the tick? First, remember, check, like use your 15 minutes, 5 minutes. You can also use 5 minutes to check with the direction of the market. Okay, so from what we see, the market is in downtrend because we can see the market is below the two moving averages. You can see it. So the market is in downtrend. Then the next thing we want to do is that we are not catching spikes. We want to follow this tick. So what we do is we look for place where this candle, this Bollinger Band, this line, this is our Bollinger Band. We look for a place where it crosses with the tick. What I mean is, example of this place, they crossed here. So the moment they crossed, you can see 1, 2, 3, 4, 5. You are only going to take 5 ticks, which is 5 minutes. So you stay on this trade for only 5 minutes, you get out of it. The reason being that after this one, there might be spike any moment from now. Why? Because the market is in downtrend. If the market is in uptrend, you can hold for longer time. But because it's a downtrend, you are going to just take just 5 candles, 5 ticks, and you leave the market. Okay, so this is another example number 1. They crossed here. I mean the Bollinger Band crossed this tick, not the spike, the tick. Crossed the tick upward. Okay, then this is another example here. Every time they cross, probably before you will meet the cross, you might meet it at this second one here. When you see that, enter and count 5 candles. So this is will be 1, 2, 3, 4, 5, and you are done. So when you count that 5, you get out of the market, you are done. So let's look for another place where they crossed. As you can see here, when there was crossing here, but there was a spike. So if you calculate it very well, you discover that the 5 was also gotten even though there was a spike. How do I know? Because here we have this cross, then we have 1, 2, then it spiked down, so we count again 1, 2, 3, 4. So if you have entered this, you would have also made profit from it. Then but this was not a proper crossing compared to what you see here. This is a perfect cross, this is a perfect cross. Okay, so that's one thing. Then like this one, if we have entered this trade while I was putting all this thing, you would have seen that there was a crossing here, and the moment there is a crossing, we have 1 2 3 4 5. By now we are out of the market and we have made our money and we step out of it. Okay, so that is how you can do. Remember, first thing you should do is to know, by using your moving averages, the direction of the market. Then the most important thing here is to make sure you have to be patient to allow this Bollinger Band to cross this tick movement. So the moment the Bollinger Band crosses with these tick candles, you can enter a buy. And when you enter a buy, remember, you only take 5 candles, which is 5 minutes. The moment 5 is complete, you get out of the market. Okay, so that's what you can do. So I'm going to look for another pair now. Let's say boom. We have been trading on crash, so let's check boom. You know, boom spikes upward, like you can see this very long spike. If you are able to catch it, it will give you good amount of money. So I'm going to post a video on how you can do this, so subscribe so you can be notified. Okay, so this is a perfect for this particular boom. What you are looking for is a cross. Okay, you can see this was a cross. The moment it crosses, we have more than 5 candles, even more than 20 candle tick movement in this way. But remember, the strategy is for you to catch 5. Now remember, I said you can go for a longer period if you use higher time frame to check the direction of the market. So from here we discover that the market is in downtrend. Why is it in downtrend? Because right here we can see that all the candles are below our the 2 moving average that we put. So because they are below, it means that this market is a downtrend, and that was what happened here. See it? This was the scenario of that movement, and this is the one that is just happened here. This one is this particular long journey here. If we take it back, you see another long journey. So that is what I was trying to explain. And from here you can see a perfect cross. So this will be a perfect time to enter the trade. You count just 5 candles, you close. So the same thing, remember, for boom, when it spikes upward, you have to wait. Like imagine this place now, there was no cross between the tick and the Bollinger Band. So if you have entered, you would have run at loss, all these losses. But here, right here, you can see there is a cross already, and if you have entered, you will see 1 2 3, and this is 4. We would have been getting ready to get out of this market the moment this 5th one closes. So that's what you can do. Now for lot size, if you use if you use one lot size, one candle is 0.5 lot size. If you are using crash 1000, this one, if you are using crash 1000, one single candle like this is a perfect time to enter the market. You can see it right here, so we can enter it right now. Okay, the market is in downtrend from this chart, but there is already a cross here, so you can see perfect timing, and you can enter it, and 5 candles, you are out. So like as I was saying about the lot size, if you use 0.2 to enter the market, one candle is going to give you 10 cents. Okay, you are going to have 10 cents per candle. So if you use 1.0, one candle will give you 50 cents. Okay, so let's do the math. 50 cents, let's do the math so you can know what to do. So if you use 0.2, one candle is going to give you, I think I can do the calculation right here. Okay, so let's say I'm using 0.20 or 0.2, both are the same. Now I can, if I do this, then one move, which is this one single tick for one tick like this to start and close is going to give me one is going to give me $0.10. This is dollar, okay? So it's going to give me $0.10 like this, $0.10, okay? So it's going to give me $0.10 per move, okay? Let's say per 50, one move like this is going to give me $0.10. Okay, so if it gives me $0.10, the next thing I want you to also know is that I'm going to have that 5 is going to be $0.50 for 5 candles, because 1 is 0.1 times 5 will become 0.50, right? So for 5 move you are going to have 50 cents. Okay, so if you want to do this, you can test it for some period of time to see the accuracy it gives, so that you will, before you use it. Okay, now if you use one lot size, which is 1.0 instead of 0.1, what you do is, if you use 1.0, then one single move, one candle is going to give you 50 cents. This 50 cents becomes 1. So it means that if it gives you 50 cents, if you multiply it by 5, it means that every time you get this indication right and you entered 5 candles, is going to give you $2.5. So if you can get 10 of this move in a day, 10, if you, of course, if you have time to stay with the market, you have more than 10. But if you, let's say you didn't have much time and you were able to get just 10, this 10 multiplied by 2.5 is going to be around $20.5, if I'm not mistaken, or $25 rather. So you are going to make $25 from it if you follow the strategy accurately and you use one lot size. So it means that if you use 5 lot size, one move is going to be $1. One move $1, one tick $1. So 5 ticks will give you $5, and if you cash 10, it's going to be $50. Likewise, so you can do the math, and please use proper risk management, because don't just over labor your account. If you are confused or you have any question, don't forget to drop it on the comment section, and also follow our Telegram channel. The link will be dropped on the description box. Follow our Telegram channel where we drop some updates and all that, and you will be updated, and we will do our best to answer all your questions, and so that you will be profitable in the trading journey. All right, see you in the next video.